Hey everyone, welcome to another video. I'm very excited to get into this topic. This is something that I was working on today and that I wanted to go over in this video because I think this will be massively helpful to you. And we're talking about market opens. And so the topic behind this and the reason behind this is that I think that people should spend the most amount of time backtesting every day as much as you can. And the reason why is because the more understanding, even if it's in hindsight, the more understanding that we can develop about how price action moves, the price delivery into point of interests, when our point of interests formed, and basically just increasing our probability of a trade. I would really like to cut down the amount of hours I spend trading. And the reason why is because I want to be able to maximize my return on my time. So the more time that the less time I can spend and the more risk to reward that I can make, the more return I can make, to me that's the most important thing. So I spend a lot of time back testing so I can spend less time trading, right? And so today's lesson is basically what I've done is I've taken an indicator. There's several of them already out there. For example, like if you just go here and to your indicator section, you probably already know some of these sessions, like this one, sessions, London, New York, and Asia. What I've done is I've taken that one and I've made some modifications to it in the past. So for example, I typically use this one every day, which is one that I've modified. It only highlights 3 hours in London and 3 hours in New York. And I will only trade London or New York session for that day, and I only trade 2 to 3 days a week. Now, recently I've been working on something to improve it because what I've noticed is Frankfurt has actually been providing a lot more entries, and a lot of times if you're waiting till London because you expect that's when usually the most volume will flow into the market, sometimes you notice that you might miss the best entry because I've seen that Frankfurt has provided very well lately. And so what I wanted to do is go back and backtest for recent price action. This is over the course of April. I can't speak to what's happened in the past, let's say, for a long time, because I've only backtested the last month. But this is something that I think you should take and practice and apply to your own system. So if you want this indicator that I just basically modified, right, renamed it, it's the market open, whatever, you can't find it on here because it's not published. I don't know how to do any of that stuff. So what I'm going to do is I'm going to share the link to this document and to this case study. It's going to be in the link of the description of the video. All you have to do is click on it. When you open it at the top, you'll see a copy button or a duplicate. You're going to duplicate it. Then you're going to go to the right side of my chart and you're going to be able to see this. And all you have to do is copy that and then go to another chart and then paste it. And that way you'll be able to have that specific indicator. You can also see the times. For example, this is the times if you already know how to modify the current one. This is the Pine script. These are the hours that I have. And so this system is built with basically tracking 15 minutes before the market opens, and the total time that I give is about 60 minutes. So 15 minutes before the market opens up to 45 minutes after 45 minutes after it actually does open. And so the first one is you're going to see that the red color is going to be Frankfurt. This bluish color is going to be London. And then this light grayish is going to be during New York. Now, you're going to notice that New York is slightly off a little bit. It's still within the same 60 minutes. But a lot of times you'll notice that there'll be a small variance of minutes. Now, what I have noticed is that Frankfurt and London time is almost very on point and accurate. New York sometimes has moves slightly outside of the 1 hour open. But the idea behind this is to maximize your trading and understand if you know that the best move is going to come within 15 minutes of the market open to 45 minutes after, then you'll be able to plan your trades a lot more strategically on what you can expect to happen. So what I want you to pay attention to on these examples that I'm going to go is when is the point of interest formed, right? And if it's formed in one of these market open hours, how is it treated later, right? And let's go over like the actual stuff, right? So that's what we want to see. So first things first, we're starting on April 5th on EU, right? So this is Euro US dollar. We're on the 15-minute chart, just to keep it simple, right? So we have this low. So you can see the price was pushing, it was bearish. You can actually see that the move was initiated during London previously, right? So we made this really strong push to the downside. We made this low. This low, we got the first reversal here at Frankfurt. So this is right in the Frankfurt window. You can see that we actually took this high and we shifted price bullish. Now, price was then shifted bullish. We had a pullback within London, but not within the London hour open, right? So this was just price action during London hours and Frankfurt hours. Price then gave a little pullback. And once we get into New York open, what happens? Well, you can see that if we look to the left, that New York open trades into a supply point of interest, right? And because we know that the higher time frame, sorry if I didn't mention it, the higher time frame daily and weekly and 4-hour is all bearish on EU, it looks like New York decides to respect this point of interest. So we actually peak the moment that New York market opens. You can see that we basically have a reversal of price and we get a point of interest that is formed. We have a buy to sell, and you can see that price basically pushes back lower. And what we can see that we're pursuing, well, we have this demand zone that pushed price into the supply. You can see that we did give a reaction. Price did sweep liquidity internally, came in to tap this, the low, let's say, of the sell range, the supply that was formed here, right? Let's properly mark this as a supply zone. And then you can see the price pushed back into what? The point of interest that was formed during Frankfurt that pushed price. This was basically where we had the bullish change of character to the upside that pushed price into this point of interest, right? And so you can see that New York reversed, came back and tapped the point of interest, the first one formed, the first sell to buy formed inside Frankfurt, right? Then price is pushing up, as you know, this is probably during Asian session. That basically is pushing price up very correctively. You can see that we're building liquidity underneath price. And you can see that what are we pursuing? Well, we do have liquidity here, and we do have a buy to sell that is formed in New York. So what we do see is that price then later pushes up into this supply that has failed to break structure at this moment. So technically it's weak, but we do know that the higher time frame is pushing for sells. So there is a chance this can hold. Now, when does price come into this point of interest? During Frankfurt open. So Frankfurt open the next day propels price into the supply. This supply is then respected, and London is what pushes price outside of this supply. So here we can see that Frankfurt and London are respecting a New York pro trend, higher time frame pro trend POI that was formed as a result of another supply over here. You can see that this later causes a break of structure. So had you not caught an entry here at this point of interest, it probably would have been a lot harder for you to catch any other trades during London as price was dropping, right? So then we form this low after we cause a break of structure to the downside. Price is then pushing price back to the upside. Now what do we have? This is a very clean push to the downside, meaning we don't really have a lot of liquidity within this range. So what that usually means is when we don't have liquidity for the point of interest here, this new supply, this supply chain is likely to fail. And that probably means that we're going to sweep it. So we have this low, and then what we have is this high. Now this high is formed slightly after New York. You can see the New York opens right here, which is just below the, let's say just at the bottom of this supply range. And what we do have is New York pushes price into the point of interest formed during Frankfurt and London that pushed price, caused a break of structure. And slightly after that, we have New York liquidating the EU highs, right? But it still respects the point of interest that they formed the previous day during New York. So New York is basically sweeping Frankfurt and London, respects New York, right? So that's interesting, right? Then this goes along with the higher time frame intention. We break structure to the downside, right? Here we do have a demand zone that was formed sometime in London, but not at the open time, right? And that's where we ended up pushing price higher up into here, right? So as price is pushing down, we do tap the demand and we form a flip. So reaction to demand, form an extreme that takes liquidity, and then failure of this demand as we break. We can also see that we've built up liquidity in here, right? So we have this, right? We have this inducement just below a POI. And you can see as we're pushing price lower very correctively, we're showing some weakness here because we're not really being very impulsive, we're being more corrective. Then price, we can see just before Frankfurt, gives us a change of character bullish. So this high that made a low was taken. Frankfurt then does what? It makes a liquidation of the price that just gave a change of character. So we have a change of character here that basically failed. We take the lows, and London, right? So Frankfurt takes the lows, then London takes the high and does what? It pushes price bullish. We get a bullish change of character again that takes price into a valid flip zone, right? So we're trading back up to mitigate this supply. What we do have is just before New York, we can actually see that New York swept this liquidity internally, right, that was formed. Here we have relatively equal highs. And then after this, supply is respected. So New York basically, just before New York opened, just a little bit before, so more than those 15 minutes, but still something to note, we come into this point of interest during that time. And after that sweep, what we can find is that the supply is respected and causes a break of structure to the downside, right? Here what we do have is New York further pushes lower, and we basically liquidate the EU lows. Then we're kind of fresh in this chart. This is during New York time. This is also during Asian time, right? Whatever, we're not focusing too much during those sessions. What happens during the next day? All right, so you can see that we had this impulsive demand push to the upside that had formed, right? So this is the range. We could even focus our point of interest a little bit more clearly on this unmitigated sell to buy. Let me zoom in a little bit here. You can see that EU, as we're being corrective here, so we're building liquidity underneath, right? After the tap of this POI, what do we have? We have a change of character to the upside, but we respect the supply. Then Frankfurt dumps, takes liquidity, uses this as structural inducement, taps into this demand, and you can then see that what are we getting? So signal, maybe we could be, for example, respecting this demand, and London propels price into what? If we look to the left, 2 days prior, we have a high formed by New York, right? And Frankfurt and London propelled price bullish into that supply zone formed just around New York time, right? What we can see here is we make this high, we respect it, price is then pushing back lower. We have a demand that was formed during a POI, a demand point of interest formed during London and Frankfurt. Then what we have here is during New York, you can see that what we do form is we have this low, and then this high. This is basically a sponsored candle that takes liquidity to the left and then drops. So New York pushes price lower to fill what? An imbalance that we left behind in New York, taps into this demand, forms a flip here. So we give a reaction to this demand extreme. We form an extreme, we mitigate these wicks, right? And then price creates failure of the demand and wicks through. So this is a valid flip. But we also have inducement left behind here that is part of the flip. What do we see? We're basically being corrective as we're building liquidity during the rest of New York and Asian session. Lots of liquidity on the upside. If we also look to the left, we also see this low, right? And now we see that we formed this relatively equal low. So we do have some liquidity, relatively equal lows below. And we do have a point of interest that we could be pursuing, right? Prices then being more corrective, we're continuing to form weak highs or manufactured liquidity. Frankfurt opens, and what do we have? We have a buy to sell engulfing. So this is a signal of bearish volume entering the market, an injection of volume and momentum as we get a buy that sweeps internal liquidity and then drops. What we do form here is Frankfurt forms a sell that liquidates these equal lows, right? So that's the liquidity we pursue in Frankfurt. London then basically is forming what? It's building liquidity. You can see that we get a change of character bullish as this high that formed this low gets taken. And we're forming some liquidity here. So this looks like we could be developing a demand chain, but we basically don't see too much action in here. So we see that we're forming this relatively equal highs. Then price drops and liquidates in New York open. So New York open shifts bullish, but just before that, it sweeps the EU lows that are formed during London. So Frankfurt pushes price low, sweeps liquidity. London then starts building liquidity, and it's very small range of liquidity, meaning that it's kind of it's not really making any progress. It's not really pushing for any big moves. It's just liquidity building here. And you can see that the moment that New York opens, we have a sell that liquidates these lows and then explodes with momentum to the upside. Now, where does price come into? New York is satisfied after a sweep of all this liquidity, also a strong supply that was formed during Frankfurt, right? And you can see that what do we come in to mitigate? A point of interest that was formed just around New York open the previous day. So this was a supply formed during New York open that was respected during the next day New York open. And so that's very interesting. When we see trends like this, it's like, okay, we're noticing when a point of interest is formed and who's respecting it and why it's being respected. We're seeing development of liquidity, and we're seeing when the moves are actually happening, right? So after this sweep and the respective supply, the higher time frame comes back in, and what do we have? We continue with our bearish order flow. Price then takes New York open and drops price lower. Here we have a change of character. So we have this low, this high, we make a new low. This low then takes that high, right? So we're showing intentions to go bullish. Price then comes in and Frankfurt opens. And what do we have? Well, in this swing, we can see from this low to this high, Frankfurt doesn't want to buy in premium pricing. And so what they're going to do is they're going to push price back into discount pricing, into a demand that caused a change of character. You can see that this is unmitigated, and we also have some liquidity here. You can see this is a sweep that continues to the upside. So this is liquidity. We sweep this liquidity, tap into the point of interest. Now, when do we tap into this? So Frankfurt liquidates some structural liquidity here, some early buyers, right? It comes into this demand that was formed during like Asian session, right? And then what does London do? London then respects this demand and buys. So we push price higher, right? Here what we fail to do is take out the Frankfurt high. And so technically we're respecting this supply in here. So let's mark that as a supply. You can see that we're building this supply chain, right? So we have this high, pushes lower. Comes back in, mitigates, pushes lower than that last low. Comes back up, mitigates, pushes lower than that last low. So lower low, lower low, lower low internally of this move. You can see that we have this, basically this failed attempt to take price long. We're respecting supply. What happens? New York then sees that we built liquidity during London, sweeps Frankfurt open, and sweeps London weak highs, right? And then does what? Liquidates this entire demand. Once we liquidate this entire demand as this open, the New York liquidity liquidates the EU range high and liquidates the lows of London. So then what do we have? Price then during New York just starts pushing price higher. We have this low that ends up forming this high. Now what we can see about this is pretty much a very clean push to the upside. We're not really met with a lot of resistance. There's nothing really too interesting that happens here. Now what we can see is that this high that was formed, that was basically a respect of a previous New York supply. We formed another New York supply. You can see that New York, after liquidating the lows, then pursues price back into the supply. And so here we have a mitigation of a point of interest that was formed during New York, right? We give a reaction to it, and then later we cause a failure of that supply and we push price higher. Now what do we see here? Well, on this leg we see that we have lots of imbalance to fill, and this was a very clean push with no point of interest. So we see that maybe price would have to come lower into better pricing or to liquidate this point of interest entirely and take the lows, as we're overall bearish. Now Frankfurt open, where does it open? It opens right here just below a point of interest that does what? Frankfurt respects a New York created point of interest. This is slightly, let's see, this was when? This was at the close. This was just a little bit before, 1 hour before, about an hour before London. An hour before New York, and a little bit after London session starts to calm down, right? So that was a point of interest that was formed pretty strong. Anyways, what we do have is Frankfurt basically respects that point of interest. And so what we can see here is we have the first bearish change of character. Price was bullish up until here. We have this low. We take the high, we respect supply, and then here we have a change of character. Take the low, London takes the low. We're building some liquidity in here. What do we have? We have these highs here that push to make a new low in here. New York opens, and what does it do? It sweeps internal liquidity, respects the highs here, maybe even sweeps something in here on a lower time frame. But we can see the New York creates a buy to sell that's engulfing. And you can see how much momentum is formed in this move as we create a very strong break of structure to the downside that takes all of this liquidity in here and pushes through this clean push with another clean push. Then we form this low, and as we make this low, we start giving some potential bullish order flow on here. We make this high before we start pulling back, and so we're paying attention to where can our next POI be formed. So here, what we're looking for is we see that we have this low, and then we have this high, this low, this high. So if we're marking this up, for example, this technically, it does not breach that high. So technically, if this is the high, we want to know what formed that high. So we could say technically that this is the low that formed that high. So this low made this high. This failed to take the high. So when do we get a bearish change of character? This is the last buy to sell that is engulfing that gives us our first change of character, right? It's not during any of the time frames, but the idea is this is a point of interest. And then what do we have? We push price lower. We give a tap of nothing really in here. We have this high. We push to the downside. Then what happens when we come into Frankfurt and London? So in here, what we can see is price is pretty weak. We have some bullish order flow injecting to the market on the lower time frame. Frankfurt opens, doesn't really do anything. London opens. London causes a bullish change of character that's internal, right, to mitigate a point of interest. So this high created this last low. We didn't take that low yet. So when we take this high, we have a change of character bullish. But where does price trade into? London pushes price bullish to come in to mitigate a supply that gave the change of character bearish, a realignment of the higher time frame, right? Then price comes back. We don't really get too much action in here. New York just buys with a little bit of weakness, kind of sweeps some internal liquidity here, but respects the supply. Let's go to the next day. Here we have, how would we mark this out? Let's do this. High here. What forms that high? We have a change of character bearish, right? Then we change bullish, and then we get a failed change of character bullish, and we drop to the downside. So what formed that high? This low, right? So we have a change of character bearish that sweeps all this liquidity in here, right? So let's mark that out as liquidity, right? And the idea behind this is we're just backtesting together. We're just looking at these examples, right? So what do we have? We have this doji candle that is the first buy to sell engulfing, right, that ends up breaking or causing change of character. We have inducement of liquidity just below this point of interest. So that gives us further confirmation that this could hold, right? We then form this. This is like a buy to sell, right? We make this low that pushes price. Once Frankfurt opens, what do we have? Frankfurt then buys. London then continues to buy, gives a change of character bullish that fails. So what we do is we sweep the highs, we sweep the lows, and then we give what? Price pushes start back up during London. So this is the rest of London. Very corrective, very weak buying. But what do? We come into this supply. And when do we tap the supply? That's the important part. New York. New York gives a reversal at market open when we tap the supply that gave a bearish change of character in alignment with the higher time frame. This is the most momentum we've seen in the entire previous day. This entire day, these are the biggest sell candles that we have from any of the candles, and it only makes sense that New York is going to sweep the highs of London, right? And it's going to sweep the lows of London that were also formed after a respect of this point of interest. Then we break structure to the downside and we continue. Price is pretty weak during Asian session. What happens during Frankfurt open? Well, if we look at the chart from Asian session, we can see that we have a lot of liquidity built up here. Price was pretty weak. As you can see that we did not really make any progress. Here we kind of took these lows here. Then we have a mitigation of the supply that broke to the downside. We failed to break to the downside. Frankfurt opens, and what do we have? An order block that forms inside of Frankfurt. So order block formed and bullish change of character to target liquidity above. This is where we give us our change of character right here, because this is the last high that formed a low. So that's our change of character, a valid one. Whoops, let's lower time frames just to keep it clean. Then what do we have? London opens, and then we have a sell candle that then creates more buying to the upside that ends up doing what? Coming back to respect this POI that was formed during what? During New York. New York formed a wick as a result of a mitigation of this point of interest. So technically we have this right here. We have this liquidity. This would be used as inducement, right? So let's mark that as so. Liquidity. And then now we have we have a point of interest on the lower time frame in here that has inducement for it, right? This is where we have a change of character bearish, right? Because technically we had this low that formed this high, we pull back, then we have this low forming new high. So this low is technically supposed to be strong, even though, you know, just because we made a new high in here, we gave the change of character, and then price rolled over to break structure. So this is where we had the momentum that caused the change of character. We can see that we then came in to mitigate that as a result of the sell to buy that formed during Frankfurt to sweep all this internal liquidity to come back to mitigate a point of interest formed during London. That was formed during New York, right? Hopefully this isn't so confusing. We're just backtesting here. What do we have? Price is being very corrective. We're not really making any progress. Supply is in control at this moment, and we're just basically ranging in here. We have a lot of liquidity underneath price here. We do sweep some liquidity before we buy to the upside. What then happens? We basically have this sell to buy, right? London fuels bullish price action towards liquidity. Where do we have liquidity from? If we look left, we basically now formed all of this liquidity. This is like trendline liquidity that had not been mitigated. So when we are opening here during Frankfurt and London, they decide to take price higher to then sweep everything to the left. We take all of these highs and we push price higher. So this is a sell to buy on a higher time frame. It looks a little more clean. This is the range, demand range, and we form these highs. New York then does what? Come in. This is where New York open is. We mitigate the top of, we tap the top of the range, and then New York then buys price higher. So we push price again higher because what happened? Well, if we look at this point of interest, when does New York open? New York opens in discount territory. So they're not going to buy in premium, right? And they're not going to sell in discount. What they're going to do is they're going to push price back up. So New York pushes price back into premium territory. We respect the highs. We just form some liquidity above here. And then we can see the price is just kind of messing around. We are building up a lot of liquidity up here. And then we have this sell to buy that is formed. It looks probably better on a 4-hour. But what do we see here? Price is then pushing up higher. Once we get to Frankfurt open, what happens? Frankfurt opens, we have a pause, we create a doji candle in here, which is doing what? It's a reaction to this last buy to sell candle that was engulfed. So let's mark that out. This is a supply, right? Frankfurt opens at the supply, and what do we do here? Well, of this time frame, we have these highs, we have this low. We might use the 50%. Where's the equilibrium tool? We're just at the equilibrium, right? And what do we see? In this case, what can we pursue? Well, because we have this liquidity up here, we have equal highs, and then we have this trendline liquidity here. It would make sense that Frankfurt could take out this liquidity. So this is where the momentum and volume is injected the most, right? We have this point of interest just before, but this is where we decide when Frankfurt opens. You can see the massive momentum that is formed during this time, and London continues to buy, but when London opens, we have a sell that sweeps some liquidity and continues to make the high. We form the high during London, and then price then dies off. And what's going to happen? Well, we form this new leg, right? And so we have this low to this high. Where is currently London at this moment? So price is currently here. We open price inside of a little bit of discount territory. So what we do is they allow some buyers to come into the market, push price back into premium territory above the 50%. And then what do they have? A complete drop off of price. New York fuels a drop to fill what? Well, we leave behind this imbalance here. This is a pretty big imbalance formed on the 15-minute. And we also see that we don't really have any clean point of interest in here. So likely we could liquidate this entire area here. Let's move this a little to the left. We drop price off, very bearish. Comes into this demand. This is a sell to buy engulfing on a higher time frame. We're then building liquidity in here. You can see that we make this low, this high, break to the downside. This comes into this point of interest that was formed before Frankfurt. Anyways, we make this bounce. This is basically like a flip. So let's mark this out. This is the demand. Demand is tapped, form an extreme, takes some internal liquidity, not really too much, respects the supply, and then does what? Creates a failure of the first reaction. So we take this first reaction. Then what do? Corrective buildup of liquidity. You can see that we're building all this liquidity underneath here. Price is very corrective, leading into the supply point of interest that's from the flip. And what happens? Price taps, takes the low, comes back. During Frankfurt, liquidates the highs. We leave some equal highs in here. We take some liquidity. And then what does Frankfurt do? Frankfurt respects, basically it peaks and it respects the supply and it injects high volume of sell orders. And you can see price just melts off. And London continues to push price lower. We get a break of structure to the downside from all of this move. We sweep all of this liquidity in here. A lot of liquidity that we formed. And then what do we have? Price is now in what? From the most recent swing, we have this high to this low. Oops, let me use the other tool. This high to this low. We're currently in discount. So what's going to happen? Well, New York, when it opens, we're kind of right in the middle of this equal territory. We have a lot of imbalance here. And we know that this was the last buy to sell engulfing that took all this liquidity. So New York is then going to what? Push price higher to mitigate this POI created that was engulfing, broke structure, and took liquidity during Frankfurt and London. So New York then mitigates that and then does what? Continuation to the downside. Now it looks like we came in to tap a demand zone. That demand zone, if we look to the left, is a very well-formed, very clean sell to buy engulfing that is the extreme of this entire push to the upside, right? This was formed during Frankfurt, and you can see that New York then pushes price to pursue this demand. We give a reaction, create an extreme. Price then starts pushing back low. You can see that we're very corrective leading up, impulsive to the downside, and we come back into this demand that was formed during Frankfurt. Frankfurt opens and then decides to take out a point of interest that they formed previously, right? That was strong. and Frankfurt then initiates sells with injecting very high volume. You can see how massive this 15-minute candle is. We form this low. Then London opens, and then they begin to push price higher. We get a little pullback in here. We form this high. We form this low that respects demand, right? So we come into this demand zone, right? Then price comes back up and sweeps the highs. What do we have here? This is what happens during New York. New York then sees that we have an opportunity to take some liquidity, even if this liquidity is currently weak as it respected this demand. So because Frankfurt and London sold very strongly, what is New York going to do? They're going to pursue premium pricing. So when they open just about here, they push price higher, sweep this structural liquidity, come back into premium pricing, and then fill this wick with sell orders and then break structure to the downside again, right? So New York continues to sell and takes the EU low, right? Then we come back in, price is very, ranging in here during Asian session. We have this low, we make this high, price pulls back down, respects this demand, right? We're forming a demand on a lower time frame in here. Then what does Frankfurt do? Well, Frankfurt sees that they've pushed price lower. New York has pushed price lower. Where are we in pricing? Let's use the equilibrium tool here. From this high to this low, you can see that Frankfurt is currently in premium pricing above the 50%. We've taken some liquidity here. We've also respected a supply in there. We've given a flip. We have a buy, and then Frankfurt opens and initiates a sell that gives us a bearish change of character. This was the last low that made the high. Frankfurt then gives us change of character bearish, with high volume injection of sells that pass through and continue through London, right? Then we have a little bounce here inside of London, where we basically were forming some liquidity here, right? New York then opens and then takes the easy low here that we formed. So we just basically break structure to the downside, right? We then have a point of interest just before that was formed. This is a valid supply. As when New York opened right here, this is where they pushed to break structure. So they were stacking orders early. They continued. They decided to take out the low because the easiest form of liquidity in this case was just below right here. That was the easiest liquidity to pursue. Break structure to the downside, then come back to mitigate their initial position, as this is where New York created their sells in these wicks, buy to sell engulfing. Comes back, mitigates their own orders, and then drops off with much more momentum throughout the rest of New York. Asia's session is now ranging, right? We basically give a change of character bullish, right? So we have this high makes this low takes that high, the low is respected, equal lows. We take the high, we make a new high, and then what do? We sweep liquidity to the left. Price then takes the highs, so change of character bearish, that fails. Change of character bullish, Frankfurt opens, and what do we have? Well, we just swept liquidity to the downside. We just swept liquidity to the upside. We have a point of interest here. Right here. That was formed, that ended up resulting in what? We ended up resulting in some breaking of structure here, right? But we have liquidity from this as inducement, right? This then took that and left inducement slightly above. So now we have inducement here, right? This was below the POI. This is still just below the POI on a lower time frame. Price then comes in, mitigates this doji candle in here, which was the buy to sell wicks that were engulfing to the downside. And then Frankfurt injects massive volume of sells. We form a point of interest here that maybe we'll trade back to in the future. London opens. What happens? New York opens. What does New York do? Price just continues to drop even further to the downside. And you can actually see that we form some points of interest in here. We have a lot of sell action. If we mark out all the moves during this time, this would be a point of interest that we could form. This would be a supply range. Price taps the top of that range, continues, breaks structure to the downside. We're very corrective in this break, so we can see that we're not very impulsive anymore, and we could pursue some liquidity. What point of interest do we have here that's interesting to us? Well, if we look at this, we have a sweep of liquidity here that then ends up resulting in a break of structure down the line. But why is that one important? Okay, so if we look, this is, for example, let's mark this out. Let's see. This low makes this high. We sweep liquidity here. We make a new high. So this is the low. This point of interest then breaks to the downside, takes this low. We have a sweep of liquidity. So this here sweeps liquidity and then breaks the low again internally, right? What do we have in here? We have all this internal liquidity of this new move on the 15-minute. Let's mark this out. Then what happens is we cause a sweep and then we push back to the downside. We have some internal liquidity here forming. We have these as relatively equal highs. We continue to break to the downside. We end up giving a change of character here officially of a higher time frame POI, right? This is like a flip zone. This reacted to the sell supply and then gave a demand. We ended up breaking this, but the last point of interest that really swept liquidity, that mitigated another one, a supply chain, was this one, right? Now we also have all of this liquidity forming here. This is what ended up causing this break. Frankfurt then forms the low just before Frankfurt. Frankfurt basically starts buying price and pursues what? Mitigation of a point of interest that's above, because they are very low on the leg. So that's the high. This is currently the low. If we do this, for example, we're going to make sure this is clean here. We open pretty low on the leg, right? This is the low, so price is then going to have to do what? Pursue premium pricing before continuation, because higher time frame is sells. Frankfurt, London then propels price back into premium pricing. This is premium pricing. We come into a supply that is part of a supply chain, one mitigation. This would then cause a secondary mitigation. London respects this high and then breaks structure to the downside. Now we have this high and we have this low, right? And then what does New York do? New York opens pretty low on the leg. They sweep Frankfurt open, right? And then what are they going to pursue? They're probably going to pursue some higher pricing, very corrective buildup of liquidity. The higher time frame is still bearish, so maybe we have too much weakness and we cannot continue. But I can guarantee you the next big move is going to happen during Frankfurt, and it's either going to be a buy from here, or it's going to be probably a buy at Frankfurt to come back into a supply here, take this liquidity, and then drop and continue to the downside. So let's see what happens. Once again, if you want this indicator, this tool, it's going to be in the description. If you want to join my forever free Discord, which always has cool stuff like this that I leave only for Discord because they're kind of more rough videos, go ahead and click the link in the description for that. Hopefully this video helps you. This is some really good insight. I hope you don't take this lightly. Really pay attention to the market opens. That's when we know the highest volume and momentum is injected into the market. But now you know when you should look for a point of interest that's formed at market open and see how price behaves then. Pay attention to, for example, where we are in pricing territory between market opens, because a lot of times you'll see that we could pursue those point of interests, whether they're unmitigated or they have inducement or not. We might liquidate the actual point of interest in itself. Hope this video was helpful. I'll see you next time. Have a beautiful day.